Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Wednesday is going to be a fun one. September 28th, 2022. So first of all, the fact that we gave up yesterday's rally, clearly not a bullish sign given that we were a bit oversold. We had a nice gap up. But anyway, I think it speaks to the broader narrative going on. Futures flat this morning. They're improving. The NASDAQ, which was lower, but I believe even that's gone green. I think they're all green now. We'll talk about that in a second. But there was a release of Apple decreasing demand for the iPhone 14, talking to suppliers and decreasing, component necessities, I guess you could say. It's not an official release from Apple. It was like a leak or what have you. So I don't know. I'm not sure the company's actually officially responded to it yet. But either way, it shouldn't be a big surprise given the macro situation going on. Stock's down a little bit. Still expensive. Still a no touch. Here we own small. Maybe we own like 1% in Apple, and that's not going to change anytime soon. We'll probably keep it just for like a place marker to see where it goes. But yeah, not adding to it anytime soon. And plus that goes for the component side, like Qualcomm in terms of semis. I think I said it just yesterday. If you have to be there, that's probably the one that we can sort of endorse, given the yield, given cash flows, given the diversity of verticals for sales versus historic. Those things do make it look a little bit more attractive, but certainly not adding to it right here. UK is going into a measure of QE after hundreds of pension funds cried uncle for margin calls on their bond holdings. So they've got a CPI, I think last reading was 10%. And they're still raising rates, but they're going to buy bonds also on the long end. So the gilt's lower in terms of interest rates. So, but who knows? Godspeed to the UK. That being said, it is our opinion that the U.S. will engage in something like this later when the Fed blinks, which will happen because this whole thing's going to continue to get probably really ugly. But I think that's at much lower levels in the major indices. We did talk about our testing for 3,000 S&P back in our webinar. Take a look at that if you didn't see it. It's pretty basic math we went through. But it does look like our equity market for now is getting emboldened by the actions over there. Yields down big time. So our bond market, our treasury market is bid this morning. There's no two ways about it. I think yields on the 2-year are down over 3%. And that is the tail. That's the tail for Fed funds, right? That seems to be where the Fed is going, is with the 2-year forecast. So that's pulling in for now. See what happens throughout the day. Biogen, very positive news on their Alzheimer's therapy, which is a surprise given this thing was seen and understood by many to not really have the muster for approval. So it's still really puzzling. It was a pretty extensive study. I haven't looked at it, but extensive study, great effects in terms of reducing symptoms. Stocks up 50%, 50, given this is a surprise. Take a look at Lilly. Lilly is, from what I understand, supposed to have a superior Alzheimer's therapy. Lilly's just knocking the cover off the ball right now with their pipeline and their existing. They've got like probably one of the best weight loss drugs right now out there, period. So watch that stock. Probably new all-time highs in Lilly today. It was up almost 8% last I checked. News out of DocuSign, they're going to restructure and reduce workforce by 9%. I'm going to see a lot more of that from other companies, I think. And then for us, like moves We added to some long vol yesterday on the big upswing. We're gonna do that again when this market lifts its head big. We're gonna add to vol. I don't think this is over. We did take off our inverse ETF holdings. We had the PSQ and SH. We did take those off. Took that, at a pretty good profit in both of those. Banked that just because we do think this market is. I mean, I think it can. It's still oversold. I still think it can rally here, despite all the somewhat serious headwinds going on. So that's it. Nothing. I don't think anybody needs to be a hero right now. But if anything, I think on big up days, you add a vol and have an awesome Wednesday.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the Accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the Ignition model. The Ignition model is an all-exchange-traded fund, ETF, strategy with an investment objective similar to the Accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The Ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.